Hello guys, Dividend Enjoyer here, and today I'm going to be doing a stock analysis video of Coca-Cola, ticker symbol KO. This is a very interesting company, and this is a company that I have strong opinions about, and I think it's a very interesting buy. I think it's an interesting situation for the company, and I think that long-term things are going to get better with the tariffs and everything like that, but I also think that there are still some growth concerns. This company overall, I would say, is very high in terms of value, but very low in terms of growth. Um, I really think that this is the kind of stock that you buy if you want stable, good dividend income. But I do think that there are a lot of potential downsides with this stock just by the nature of them being at the very top and the amount of money that they have to invest into maintaining their brand image, which is extremely valuable. But Coca-Cola over the last year has had a pretty bad year, down 5.41%. Current market cap is $292.48 billion. Price to earnings ratio is 24.08. The annual dividend yield is 3%, which is very decent, honestly. 52-week high is 74.38, and the 52-week low is 60.62. So we're kind of getting it for a pretty decent price compared to some of the 52-week historical averages. Overall, the stock really, I think, has a lot of problems with being able to grow. If you think about it, Coca-Cola is pretty much in every place that Coca-Cola could be in. If anything, actually, they really got hurt by Russia with the conflict in Ukraine. But really, if I'm Coca-Cola and I'm thinking, how do I grow? It's kind of impossible. It's kind of the same problem that McDonald's has, where there's McDonald's restaurants everywhere in the world that there could already be McDonald's restaurants. And if the economy gets worse, you face the threat of substitutes. Very difficult business, but they are on top of the business. And the nice thing about Coca-Cola is that it's not a seasonal beverage. So Coca-Cola is consumed year-round consistently, the same amount by people. But unfortunately for Coca-Cola, they do have to invest a significant amount of resources into maintaining their brand image and things like that. And I kind of think that individual brands like this might not be the way to go if you're trying to play the consumer. I think that maybe it would make more sense to have something like a Costco or a Walmart that has a Kirkland signature or a great value brand, which is actually going to be worth a lot more money and doesn't cost the same amount in terms of the marketing that Coca-Cola is going to need. I do think that there is a very stable moat here with Coca-Cola, and I'm really more looking for if Coca-Cola is blatantly undervalued, which I think it very well could be. I think that there does need to be some respect here. I do think that there is a lot of value in them being the most valuable soft drink company, and as big as they are and generating as much cash flow as they are, and the share buybacks I think are something that I really want to talk about because I think that they're very positive for Coca-Cola shareholders. And I do think that there is potentially some value here, but I really wanted to dig into it some more. So here I have actually the analyst ratings for Coca-Cola. Currently, out of the 25 analysts that are rating the stock, according to Yahoo Finance, 7 rate Coca-Cola a strong buy, 14 rated a buy, and 4 rated a hold, with the analyst price targets ranging anywhere from $70 to $85, with an average analyst price target of $78.70, and the current price at $67.96. I think that it's very likely that the stock is actually undervalued here just because I think that we are kind of on the other side of a lot of the tariff things and a lot of the things that were really up in the air. I'm also a big believer that with them moving towards making sugar go in the Coke instead of high fructose corn syrup, this is going to very much make the administration kind of pat them on the back for kind of listening to them and doing what they wanted. And I think that they're going to avoid potentially some worse punishments than they could have gotten. I think that Coca-Cola is going the right way. And overall, I think this company is amazing. The only problem with Coca-Cola is the future growth. But I think that they're going to have continually consistent numbers. And I actually do think that we may see Coca-Cola be able to actually, this is an interesting thing that just kind of occurred to me as I'm talking about this. I wonder if AI is going to be able to, as a new technology, because I don't know if you guys are familiar with this idea in economics, but as a new technology kind of gets introduced into the world, it creates a lot of GDP growth and it improves quality of life. I wonder if that synergizes with Coca-Cola's company. Like if AI comes in and improves GDP for a lot of developing nations, if they're going to be able to afford more Coca-Cola. That's kind of a side tangent, but I just think it's kind of an interesting thought to kind of go off of. But overall, I think that the company is extremely strong, extremely valuable. I think they're very monopolistic in their drink. I think it's a wonderful drink. I think they have a very large moat. If you ask the majority of people between Coke and Pepsi, they're always going to choose the Coke. The majority of the people will. I'm more of a Coke fan. I like some of the subsidiary Pepsi products a little bit more. But I will say that Coca-Cola is very smart. They're also very good with their mergers and acquisitions. I do have to say that they do acquire a lot of things that make sense. I feel like they're not as spread out as Pepsi is. There's also obviously the rivalry that they have with Keurig Dr. Pepper. That's a very difficult one because obviously Dr. Pepper is starting to take more market share. I think it was very smart of Dr. Pepper to really market through a lot of the college football things and stuff like that, just kind of getting out there. But it's very important to be marketable in this business for some reason. And Coca-Cola is at the top, but again, I really do worry about that growth from Coca-Cola. I think Coca-Cola actually makes a lot more sense for your older investors, people who maybe want to live off of retirement income for the very long term and be able to really just enjoy, essentially. I think that Coca-Cola is the perfect company for that. I don't think Coca-Cola is necessarily the type of company that you want to buy if you're a young investor and you want a lot of growth. This is a very low risk, stable, low growth company. The risk obviously is in stolen market share by substitutes and things like that. But I think that the moat for Coca-Cola is continually expanding, and I'm hoping that Coca-Cola can continue to grow into the future because I think that the dividend's very stable. But I'm not very sure about the price still for the amount of growth and some of the substitutes out there that you can get, like a Waste Management or like a Walmart or like a Costco. Here we have the weighted average cost of capital sitting at 5.04%. Coca-Cola is obviously very well financed, 86.79% of the total valuation. Comes from the equity side, 13.21% is coming from the debt side. Cost of debt after tax is 3.076, and the cost of equity is 5.336%. If we go to the actual model now, we can see that the average revenue growth has been 5.13%. Average free cash flow growth is very misleading, and this kind of makes it a little bit more difficult to model. And I can show you why that is. They've been repurchasing stock, repaying debt, so they can have some wonky kind of free cash flow years. And also this trailing 12-month number, I think they've really been slammed by a lot of political pressure. And as you can see, they've also been pretty aggressive with the repurchase of that stock. Obviously, 2023 was a better year for them. I also think that it's worth noting that the boycotts to Russia are probably not good. Coca-Cola needs to be making every single dollar it can because growth is obviously, extremely valuable to them at this point. Based off of that, though, I did model off of this 2023 number because it is the highest free cash flow number. We can see that even with a 5% growth rate, there's negative 9.96% upside to the stock. So even off of the best free cash flow number, which probably is lower than what is going to be expected in the future, it is kind of difficult to model just because of that. But with a 7% growth rate there consistently and a 2.5% perpetual growth rate, we can see that there is 6.31% upside. And again, I really want to say that I think that this is, and again, this is not financial advice, but I really think that this is more the kind of stock for people who want something that's going to pay them forever and they don't really care what the price is when they're getting in. they just need a set amount of retirement income or something like that. I think that this stock makes a lot more sense for that kind of investor who's living off of dividends, who wants, a company with a very trustworthy dividend that's going to reliably come and help them pay for whatever they need paid for in their life. And I think that Coca-Cola is that company for a lot of people. I don't necessarily think that that is what you should be um, really looking at if you have a lot of years to be investing. And I do think that there are some alternatives that are better. But if you're trying to live off of retirement income and you're not invested in Coca-Cola, I think it's a pretty safe bet. Again, not financial advice. But I do think that companies like a Coca-Cola, like a Sherwin-Williams, having multiple of them and, different companies, not just investing in one, but having very safe, different companies that reliably pay you dividends, I think is always a very smart move if you're someone who just needs a dividend income and you don't necessarily care what the stocks grow into in the future. Um, but I really think that there are some better options out there. But I also do think that Coca-Cola probably is relatively cheap for where you're going to get it, because the quality is really what's so costly about this company. There's not really a lot of competition for Coca-Cola in terms of the brand name and the recognition that they have. I think that they've been doing a lot of things very correctly. I think that they're going to continue to do things very correctly. And I do think that they could benefit off of AI just because as technology gets better, I think every company is going to integrate that technology into what they do. And I think that Coca-Cola, is going to continue to make more money. And I really do believe that, um, this is probably a good time to get in. I would think about it, but I just personally would rather own Waste Management. That's my opinion. I still think that Waste Management is a better company, and I want to own more of that. But I really do think that Coca-Cola is probably a pretty good deal, especially for the dividend yield you're getting right now with rate cuts coming down. If you're someone who only cares about dividend income, Coca-Cola could be a good buy for you. So thank you guys for watching. Please hit the subscribe button. Please hit the like button if you like the video, dislike button if you dislike the video, and please leave a comment down below. It always helps the algorithm. Have a great rest of your day. Hope you're enjoying the NFL, and I'll catch you guys in the next one. Bye.